So as we do, we start here on the monthly, right? And we can see as of yesterday's close here, let's go ahead and give some more space. As of yesterday's close, we got that 50.18. So we're still above the previous month's high, which was the 49.57 quarter. Definitely a key level to continue to pay attention to. We're a pretty decent ways away from it right now, trading at 50.22, but it's definitely a level that you want to continue to monitor. I'm watching this 49.96. It's an equilibrium that I found from the past, so we'll kind of keep monitoring that, and then below that 49.40. Still kind of maintaining this trend line that's on the weekly basis. So when we switch over to the weekly, you can see that this week we did get a little cessation of one time framing, but more of a weak low than anything else. And then we set this high here, but we've come back above that trend line. And so that's going to be key to watch the previous week's high, or previous week's close, excuse me, which was 50.44, which we're still trading below. In order to get that momentum, especially heading into the last couple of days of the week here, that they're going to be looking to try to trade back up through that level, close up this gap that we're trading in right now, morning doped, and try to get higher, right? We had a +4 last week, so we talked about, being below that causes an increased chance of liquidation. It seems like we already got that liquidation. Markets recovered nicely, and now we'll look to see if they trade back towards that 50.44. Switching over here to the daily, yesterday we got a +4 day. So we got this big gap down, +4 day here. We get the big gap down, -4 day. Yesterday, basically right off the settle, +4 day. And so today we know we want to be monitoring that 50.18. Below that 50.18, we're going to have to be a little bit cautious. We're trading at 22 right now, so this makes it a little bit of another interesting day here, because should we break that, we do have to be cautious, even though it is going to be kind of setting up play number 2, right? Back inside value, look for that long, which I still think is going to be the play today, but it is going to be a little bit interesting or a little bit more difficult to play just because of the momentum that came into the market yesterday. So really, we want to see this market really kind of hold what we've got here. We did finish spike rules yesterday, so that gives us a little bit more confidence or a little bit more leeway to play with. If we flip over here to the profiles, little review from yesterday here. We can see the market opened up on a gap, closed the gap, found some shorts to cover, traded higher, traded lower, ran into a buyer, good excess on the low, and then spiked into the end of the day, finishing on a spike, leaving behind some Brad prints here around that 5,000 level. So definitely a level that we want to watch. We've talked about this 16 to 20-ish level, 16 to 24-ish level. That is an opportunity for sellers to try to come in, just because it's a weak spot in separating these distributions. It looks like we might get a gap, open on a gap again. It's very close though, so it's a very small gap, so we'll have to be paying attention. Now with the spike, right, that spike comes down basically right to that 12. For me today, I'm really going to be kind of looking for the hold of this settle. I mean, if there is a little break, I want to see a reclaim and then opportune to get long, right? Opening up above or in the spike typically shows acceptance. Opening up below the spike would show rejection. So we're looking so far, we do have some time left, right? About 25 minutes, but we're looking at so far as acceptance. We got some news this morning. It didn't really do anything. We do have some more news at 9:15, then some more news at 10, then a Fed speaker at 1:15. So a little bit of news kind of here and there. Nothing really too crazy as far as I see, but definitely just like, we'll continue to monitor. We would like to see it kind of hold this settle though and continue to the upside. That would basically be holding with the spike, and then that first target would be, well, really kind of this upper distribution, so like 26, so you're looking 18 to 26, and then that Globex high, previous day's low, gap fill, up 33, and then above that 41, and then 44 the weekly highs. So we'll go ahead and kind of map this out here. So we're kind of looking 16 to 20 for these opportunities, right? We, like I said, we'd want to see it kind of claim the settle, hold, and then we target that 26. Next level up is that 33. Next level up is the settle. Below that, there's actually, I mean, it actually kind of is a little bit of caution here. As if we slip below this like 12-10 level, then there is probably a trade back into these singles right now. So if singles don't fill, that'll be your kind of long opportunity. So we'll put fail to fill singles shows sellers stuck, long op, fill of singles shows acceptance. That's how you spell it. Acceptance. Longs must be caution. Right, and so what I mean by that is if we come down and fill these singles, right, the normal play would be to buy the break back into the previous day's area and then get above. So, but if we fill these singles and the market starts to kind of dance around down here, then what that does is kind of gives that market that kind of acceptance look, and then I mean, in reality, it kind of pushes the market back down to that point of control, which is like that 84, 86 area. So real cautious along that side. Not that there won't be long opportunities, but just the best long opportunity I think is going to be this continuation look here. That's going to be kind of our best look. But fail to fill singles. If they do fail to fill these singles, there is like some nice opportunity to trade back up into this point of control here, which is like 50-14. So if they fail to fill those singles anywhere down in here, if they come down and they fail to fill those singles, I think gives us kind of that opportunity there to trade back to the point of control, because basically it would show rejection of these lower prices, and then we would trade to, the most common spot of the upper distribution. At least that's what would make sense. But remember, I mean, mostly we're leaning to the long side today just because we're trading on a gap. Spike rule is definitely in play, but we do have to be cautious should we get below the settle, because yesterday was a +4 day, so we can assume, and especially if we look here, right, very mechanical M low, M open, came down, so very mechanical M low, kind of telling us that the buying into the close wasn't necessarily the strongest buying, as can be pretty much represented by this weak volume, right? We didn't really get strong volume into the close, so we can kind of easily assume that the buying into the close wasn't the strongest buying that there could have been. Morning, Dad. Should have bought just now. Yeah, you get that opportunity for Globex, but definitely that this is kind of the level that you really don't want to see get broken. I think honestly, if we do break that level, we probably will fill the single print. So maybe even just the fail down here, if the market trades a little bit lower below that 12, and then it starts to give you a little back and forth, that gives you that opportunity. But but a break of this mechanical low kind of looks probably to fill these singles, and then it's more of just a readjustment, right? We don't know what's going to happen down here, and it's going to depend upon the tempo at which the market comes down. So if it starts just like smacking the lows, and you start just seeing the market move lower every tick, never catching any breath, then most likely you're not going to be wanting to jump in front of that. Whereas like yesterday, especially this day, the day before, when we did make this low, right, during K period and L period, the market was so slow. Just even J period was really slow, just kind of slow. And then we got that kind of run up at the end. Yesterday, you got this kind of move back through the bottom, very quickly got bought up, and then the market went back to being slow. J period tried to come down very slowly, couldn't get anything going below the 85 level, and then eventually rallied into the close. So that's kind of the key. If you need some examples of what tempo is, right? Like I said, it's kind of impossible to teach somebody tempo. You really got to observe it, and then kind of stick it to your memory yourself. And so if you want some good examples, go ahead and do some replaying of yesterday's sessions. Those two will give you, the past 2 days will give you a pretty decent idea of what slow tempo looks like. Other than that, you guys have a wonderful day. Make sure that you're managing risk and sticking to your trade plan. And I will see you guys tomorrow.